Hello and welcome to this week's episode of The Capitalist Investor, the New Year's week episode. And as always, you got myself, Diamond Hands D, and we got the squad back together. Tony the Tiger, Cool Hands Luke. What's going on, guys?
What's up?
Yo.
All
Getting
right.
old. Another year, another dollar.
Post Christmas, pre New Year, right
Oh, yeah.
right in the mix. So yeah, we got
What are you guys doing for New Year's, real quick?
probably staying home.
Yeah, I do. You do nothing on New Year's when you get old.
you make a bunch of food. You
Yeah.
grill something fun, and maybe I'll smoke something. Yeah, maybe that's what I'll do.
Mm-hmm.
So
Fire
I'm in
up
New
the
York.
smoker.
I'm in New York all this week, and I was going to possibly stay for the ball drop. I'd heard it's horrible to stay for the ball drop.
It sounds awful.
You
It
literally
really
can't
does.
go to the restroom anywhere.
Yeah.
You can't find food. You're cold, freezing your butt off, and it's like a horrible experience. I heard. And plus, you're paying $1,000 a night for like a hotel.
Right.
So one night, whatever.
You're in New York. What are you doing, like Maria? And
Yeah, like Maria, I did yesterday, Tuesday, and then I got one on Friday this week as well. So tune on in. Mark, it's Christmas week. Mark, wanted to take a little time off, and he called me up to the big leagues. So
There you go. Man.
anyway, I'm doing the walleye drop. If anyone's in Cleveland, this is the most awesome hillbilly experience you'll ever have. Port Clinton walleye drop, New Year's Eve. They drop 100-foot glass walleye from a crane. And they count down like 10, 9, 8, 7, 6. They have buses that take you all to the breweries, wineries. It's awesome. So I recommend
They
anyone
drop
that
them
has,
at midnight.
yeah, it's like a big festival gathering. So instead of watching the New York ball drop or Chicago ball drop, they have their own
How far do they drop them? Like
from a crane. It's like
Well,
from
like
200 feet.
No
all the way.
way.
Down to,
It's
yeah,
gonna
it's
kill all the
awesome.
fish.
It's a 100-foot glass walleye. It's not real. it's like a big glass thing.
It's like a big slide.
Yeah, but it's awesome. It's awesome. It's the
Slide
most
'em right
hillbilly
in-
thing.
Slide them right into the water.
That's what we're doing.
I'm gonna look into this.
You should come. What we got this week?
All right. Well, we don't really need to set up too much. So we're going to talk about some hot takes. So look to the year ahead. What do we see?
We're terrible at these hot takes, so this ought to be fun.
Yep.
I don't even want to rewind what we said last year.
What I want to say is in relation to that. And then we'll talk a little New Year's resolution, maybe one personal, one financial. See what we got on the docket for 2024, which should be a wild year. It should be wild.
Yeah.
Yep. All right. So, hottest economic take. So I'll kick this one off. I think one of my hot takes is that don't listen to hot takes, and that has nothing to do with what we're going to talk about here. Because I've been sent the same article probably like 3 or 4 times now. And it's basically a hot take. It's a clickbait article, even though it was on CNBC. Basically saying like expert economists are predicting the biggest market crash in our lifetime in 2024. And I've had clients send it to me. I've had friends send it to me.
Is it clickbait to buy gold?
Yeah, you open the article and there's really nothing in there that tells you why.
Do they want you to buy gold?
Right, I'm sure there's advertisement like buy gold before
gold.
we run out. So yeah, always take these conversations with a grain of salt. We're trying, when we're looking at the economy and we're trying to make stock trades and all that good stuff for our clients. We're not focusing on the hot takes. We're focusing on the data. So these shows are always fun to talk about. But I like I said, it was great timing. I've been sent that article several times now. So don't plan your financial future around financial hot takes because they may not happen.
All right. Well, the financial hot take of 2023 was recession.
Right.
That never came.
Exactly.
So, that's the hottest take. Every analyst on Wall Street was predicting a recession. Not even close. Right?
Well, 65% of Americans think we are. So
Yeah.
Well, there you go. Yeah. But the data doesn't say it.
I know
The data. All right. So think about this. It's not one hot take, but it's kind of two, but they blend together. So in December 2023, right now, a couple weeks ago, Jerome Powell, Fed chair, came out and said that next year in 2024, there's a possibility, a good idea that we cut 3 times. Okay. the market rally. That Santa Claus rally, no, it's the Jerome Powell rally, right? Santa Claus is Jerome Powell.
Money printing go burr.
Burr. And then immediately as that happened, the market shot up like a 1.5%, whatever, that day that he came out. A couple of days later, you got another Fed guy come out and try and walk it back and say it's way too premature, but the market is pricing in 6 cuts if you look at like the probability of everything. So again, I think I said it before in another podcast. Like, think about a rate cut. It's pretty much a stimulus. You know, like they're cutting rates to stimulate the economy. And would you guys agree on that?
Yes.
Do you feel
Yes.
that way? Okay. Well, then if you stimulate the economy, doesn't like history and just the last couple of years of history, doesn't that tell us that spikes inflation?
Yes.
Okay. So then are we going to be looking, are they predicting deflationary environments?
Apparently.
Thanks, Luke. I like this. So what is going, like, and I'm sure you'll back it up, like what's going to break next year?
Well,
to
here's
cut.
Here's my hot take.
Hold on. I got one more thing.
Okay.
2023. So I had this conversation with the client the other day, and 2023 was the year of multiple expansion. That means earnings did not go up, but the stock did. Let's take Apple, for example. How much did they make? Or how much are they up this year? Like 40, 50, 100%?
Probably 50 or
50,
something.
60%.
Yeah,
They have negative revenue growth. They've been shrinking. They're decelerating. They're coming down. They're not growing. 58%. They are not growing. But yet the stock is up 60%. That is the definition of multiple expansion.
Yep.
All right. 2024 could be and should be, because every analyst is, the average analyst, I should say, is saying that we're going to have 10% earnings growth next year. That means all the value stocks that got left behind in 2023 should or could catch up to all the mega tech stocks that took off this in 2023. So 2024 could be the value stocks. So think of, the banks, for example. With if they are going to cut rates, that's great for banks. So again, next year could be not the non-growth stocks, but the value stocks that keep this market afloat.
So this my take
All right.
goes right along with yours. I think bonds outperform stocks next year. That's my hot take. I think the 60-40 portfolio that hasn't really worked the past 2 years, as in, bonds do the same thing stocks have done the past 2 years. I think you're going to see kind of a disconnect next year, where bonds actually do their job, will rally. Whatever stocks do, I think bonds will rally with the perception of rate cuts, with maybe some sort of flight to safety if something does break. So my hot take is that bonds, maybe not go full long duration on your bonds, but maybe start looking at getting some duration in your bond portion of your portfolio, which we're doing. We're looking at doing that in our portfolios, but. That's my hot take. I think also going along with your take on the rate cuts next year, does something major have to break? Well, that's one theory. I just talked about this on Varney's show yesterday. It was my hot take on the Varney show. They pushed me on the website. I was pretty happy. That's how I know I do all right when I do TV, is when they push me on the website. But my hot take was that the political pressure next year's election year, we got to acknowledge that politics does influence money. And, he even came back, David Asman came back at me and said, well, are you saying the Federal Reserve is not independent and they actually are influenced by politics? I'm like, yes, that's exactly what I'm saying. Like, at the end of the day, like, they're supposed to be independent, but you already know. Trump was even telling, Powell what to do with rate cuts and rate hikes.
You better do this.
You already know
do
Joe
that.
Biden is already calling him up, say, hey, it's election year, help me out a little bit, lower rates, let's stimulate the economy a little bit. So my hot take is whether or not something breaks next year, I think the reason why there's a big disconnect between Powell pricing in 3 rate cuts, or saying that we're going to cut rates 3 times, that's perception, compared to the market pricing in 6. I think the 3 additional rate cuts is coming from political pressure. That's my hot take too.
Yep.
Being in, and think about this: we're producing oil at the highest rate ever in the United States. whatever. I don't know what happened to, save the economy or to save the environment and everything, but that's obviously out the window. But that's good for us. Gas will be low. It'll help the wealth effect.
Deflation, like you mentioned.
I just think it's mind blowing that we are silently producing more oil in this country than we ever have, and that doesn't fit the Democrats' agenda, right?
It's awesome.
It's just crazy, like what's actually happening, and it's crazy that that's happening into an election year. Right. That will help the wealth effect, but I wanted to really look up your ag. I want to see, like, AGG is
positive now of the year.
I want to know what it. I would like to look historically, because that's a bold statement that bonds will outperform stocks.
I'm looking at TLT right now. TLT is off 20% from the bottom. That's long duration bonds, and that's in a month and a half. It's
How much?
20%
off the bottom.
Yeah. I mean, it's outperforming the market already the past month and a half.
I mean, I guess that correlates with like long-term bond. I mean, weren't long-term treasuries like 30 years? Weren't they cresting 5?
They
and
were
now they're
above
at 4.
5.
Now they're around 4-ish.
Mm-hmm.
Yep.
Well, theirs are 20%.
Well, if we have deflation, let's say we actually have deflation, and I'm talking disinflation. I'm talking deflation, like negative inflation. Yeah. Well, in that case, you'll see the 30-year and 10-year bonds trade below probably 2-3% yield when they were trading above 5. I mean, that could prop TLT, IEF, these long duration bonds.
If we get deflation, bonds could be.
There's 2 reasons to that: risk off because something breaks.
So what does the market do next year? Does it do?
I think you'll see
10% and bonds do 20.
I think next year will be one of the best years for active managers, which is what we are. I think the top magnificent 7 are going to stall out. Mm-hmm. The S&P and Qs will basically do nothing. Is my prediction. It's a bold statement. We might be completely wrong. They might not do much next year, these big indices, but the bottom 493 and the equal weight and things like that, there's going to be some alpha to be generated in these smaller cap, these smaller names.
Smaller, mid.
Yes.
Even some of the value stocks.
Yep.
Like, not the growth stocks, but the large value. Yep. I mentioned like banks and stuff. All right. New Year's resolutions. Good take, guys. I like that. Don't listen to the talking heads, because they're not really going to be right.
You have to. You
won't
have all the answers all at once, right? You got to take things. If there's new information, take that, process it, see what happens. Last thing. What if Jerome Powell nails this soft landing? What
does that
actually
even
happen?
look like, though?
I think we're experiencing it, kind of like we talked last week. The silent depression, maybe that is actually going on. And when we get to these rate cuts, if that actually happens, the economy goes again.
That means
it's in the realm of possibilities that it could actually happen, when I thought there was 0 chance this whole time. Pretty crazy.
It's
we'll see what happens.
It's possible. I'm not kicking it out of bed, so we're good.
The question is what happens 10 years down the road when we actually do have a downturn again in the economic cycle? What breaks then? Because something will break. It's not like we're going to go 50 years rocking and rolling, right? It's going to, whether 10 years from now, next year, we'll see. Anyway.
All right. Resolutions. Derek, hit me with one personal and financial resolution.
Well, one personal, I got to get back into the gym, eating right.
Oh boy.
This last quarter, it's been rough. It really has. With the kids, doing stuff every single weekend, got to get that, back to a priority. As far as financial goes, honestly, I don't have too many. But what I would say is, for people listening, if you want generalized financial advice, it's hard to give, but saving money into your 401k or your plan at work, especially if there's a match, something everyone should, take a look at doing. And it's pretty simple. It's not simple, but the concepts are simple of what we do here. The earlier and more often that you save, the better off that you will be. In today, we talked about it last week. There's higher standards now. Everyone wants to do everything and then post it on social media. Make sure you're saving. I'll say that.
Okay. Same thing with me. So, obviously personal is health, so working out, stretching more. I need to stretch more. I am not flexible, to say the least. I am actually working with a kind of a personal trainer on this. It's very painful. I don't know if it's so tight. My hamstrings in particular, like I can't even bend over sometimes. Well, I can. It's just not comfortable, right?
Yeah.
I'm not like completely worthless and useless. I can move around and I'm good. I just want to be more, right? And I want to. And one thing is, I still want to just keep on getting better at golf. So I guess that'll just be the carrot that I'll never catch. Finance. I just like to be more diligent on saving in my Roth. I either forget or, it's just because I got to do the backdoor route and stuff like that. So it's like, damn, like I got to remember to do that. And then there's multiple moves behind it. So those are the two things. And then, Luke, I'm going to let you go, but then we're going to talk about our inner office victory. We're going to take a victory lap.
We're going to brag a little bit.
We're going to take a victory lap.
Personal, same as both of you guys. In regards to health, you start working out again. Flexibility, I've been having like sciatica pain. I'm like too young to be saying this, but like I've been having something down my back and down my leg. I think it's some sciatica stuff. I don't know. I need to stretch some more. I've been feeling like sore just randomly. Just getting old socks. But that's one thing. Really, my personal goal is to learn how to turn my brain off for next year. I think, sometimes you need to go slower to go faster. That's kind of like the saying, one of the sayings, or, one of the books I read. And I just need to learn how to just shut my brain off, be able to relax at home. And that goes along with financially as well.
I've been saying this for years for you, Luke.
Yeah. But financially as well, it goes along with it. Like they need to be doing something all the time. Obviously, cuts into your budget, whether it's going out to restaurants, socialization, cocktail hours with a networking event, whatever you're going to. It kind of adds up every once in a while. So learn how to do something at home. I told you, I think last week, I bought an Xbox.
Yeah, you bought PlayStation. Xbox or PlayStation?
I never will be PlayStation. I hate PlayStation. But Xbox. I bought the brand new Xbox Series X, and I'm like, this could be my investment. I'm going to save money because it's going to keep me indoors more. I'm going to learn how to turn my brain off. But I told you, it's stressing me out more because it's just, I'm not good at it.
Because you're getting whooped by
15-year-olds.
7 and 15-year-olds.
Yeah, it's ridiculous.
Yep.
Anyway, so that goes along with my financially. So let's talk about our win.
So, all right. So Luke and I are part of a couple the investment. We're up against the investment team, but it's an individual.
Yep.
It's an individual thing. So there's about 5 of us this year. 3 CFAs and me and Luke. we all pick 3 stocks in the beginning of the year, and whoever has the worst portfolio has to pay for dinner for the other 4. So
what's interesting, everyone did pretty well. We just did better.
What about aren't the two CFAs? Aren't they negative?
They're positive.
They turn positive?
Yeah,
they were negative.
They both turned positive. They're like doing what the S&P 500 did this year, close to it.
Yeah. So, and just think like this dinner's not cheap. Luke and I unfortunately have lost like the last 2 years, so we've come up with deals to help not pay as much. But this is our year, Luke.
It's our year.
I think we're going to finish 1-2.
Yep.
My picks were Fang, which is a energy company, only up 15%. I picked Amazon. They're up like 90% year to date, believe it or not. And then I picked Activision because they were supposed to be bought out by Microsoft. It was a binary event, and I knew that. And the binary happened. Yeah. It went up like 20% after the
And
news.
what are you up total? Like 50% total?
Something like that.
Aggregate all of them?
Yeah.
That's like double the S&P, dude. Good stuff.
Hey, thanks. Yeah. So we will be going to Marble Room?
Marble Room.
Yeah, nice. It's going to be a nice night.
I'm eating some Wagyu.
I'm going to eat 5 people.
I'm going to eat some Wagyu steak. I'm going to eat a little bit.
You're going to do everything that they did to us last year.
They racked up the bill.
They racked up a bill.
So we're going to rack it up on that.
Nice.
Like, hey, do you have this wine? Great.
I'm
Bring
going to
2 of them.
I'm going to drink some Whistle and Pig 12-year rye.
It was nasty. They did not take.
My stocks were Palantir, which was my rock and roll stock, 100 and I think 80% year to date.
That'll get you in the winner circle every time.
Yeah, so that one, Palantir is a stock that is kind of a defense software contractor stock. It's done phenomenal. I think it will continue to do phenomenal. It's a stock I think long-term wise could be the next like NVIDIA, Apple over the next 20 years. But anyway, Palantir was mine. Axon Enterprise. As crime goes up, the police officers need the software and hardware to record things like that. Axon provides the software solutions and hardware solutions to police officers. It's up like 50% this year.
Okay.
My third one was the complete crapshoot that actually my first two saved. Canopy Growth. I was right about weed legalization over the nation this year, like Ohio, a couple other states. I was right about that happening. The problem is when you have an unprofitable business and it doesn't really matter when you get legalized.
Did they go out of
stuff,
business?
So they're about to. Yeah.
Okay.
So it's down like 80% this year.
How do you go out of business selling weed?
Not enough demand, my man.
I don't know. But yeah, there was actually 2024 stocks. Man, that's going to be a tough one. I think you have to pick a macro agenda and go for it.
Yep. I think themes. I mean, at the end of the day, we talked about the mental health thing. Like, I don't know. I was brainstorming with a buddy of mine a couple of days ago. Like, people are lazy. They're sad now. Like, how do you play that theme? Well, McDonald's. Like, I mean, people are sad and unhappy, and they want to crave junk food. Like, just simple things.
I'm definitely going to own, like, some type of value stock. Maybe two. Yeah. I don't know. Like, it's definitely not going to be energy. Well, I'm not going to say not energy, but I'm not picking Amazon again. They're up 90% this year. It's like crazy. I don't know. And then Activision they just got wiped out.
Derek, you joining us next year? You want to pay $5,000
No,
dinner?
that does not sound like fun. Unless you win, but
well, we're gonna have fun this year.
Those sounds like some good picks.
Yeah. All right, let's get it next year again.
I just, it doesn't really go along with our whole eating healthy and stuff. We're about to go slam some nice food and it's going to put on the weight before
2,000 calorie meal.
Was it
2,000? Sheesh. That's like
10.
maybe 3, if not 4. Yeah,
I'm doing 10. 10,000 calories.
Dude, they have a lobster mac and cheese. This mac and cheese, it comes out in this big thing that you would see at Thanksgiving dinner with like a turkey on it. It's got like a half of a lobster on it.
It's got truffle. Like what's
truffle? Dude, this thing's like $120. I fell over when I saw it when somebody ordered it. I'm like, are you kidding me? He's like, shut up and pay for it.
That's what he said to us. But that being said, just anyone in the Cleveland area, so I don't go out to these places often. It's like once every every 6 months. I'll go to like a nice restaurant for anniversary, birthday dinner. Morton's, we got Delmonico's, Red. You got Marble Room. In my opinion, guys, Marble Room's just blows everything out of the water. I think Marble Room's for sure the best food if you want high-end food in Cleveland. It's just hard to get in. I think you have to book like 5 months in advance.
Yeah, it is crazy.
If anyone's in the Cleveland area and hasn't been to Marble Room, recommend.
The only thing I can tell you is like if you get there when they open at 5 p.m., like you might be able to get because the bar's first come first serve.
Yeah, because personally, I'm a pub kind of guy. Just give me a nice little greasy burger and tavern food.
I enjoy going to a nice restaurant, high scale restaurant, and sitting at the bar.
Yeah,
the bartender's exceptionally good. They're friendly. The other people sitting at the bar are typically friendly, so I enjoy it.
Yeah,
rather than sitting at a table. That's just me.
100%.
All right, cool. All right, well, happy New Year's. Enjoy the New Year. Enjoy sitting at home, Derek. I will be too.
Yep.
I'll FaceTime you and say hi.
I might watch the ball drop, but
maybe if I get there.
My wife, no way, she'll be up at midnight. 0 chance.
Yeah, I think we're already talking about it. There might be some people that also don't want to go out come over, and I'm gonna make my dino eggs.
Nice.
The stuffed jalapenos.
Those are good.
Those are delicious, man. And then wrap them.
The only time I came to your house, Tony, you had dino eggs, and I was a happy camper.
Yeah. Well, maybe if I have some extra, I'll bring one in for you.
Do that.
The first week of January.
If anyone has any kind of good topics as we head into the new year, please send them to us. We're always looking for good content, new content, things like that. So always feel free to send your New Year's resolutions of what you want to accomplish financially, personally, and maybe we can talk about it.
Absolutely. Well, hey, thanks everyone for listening. Have a great New Year's, and we'll talk to you next year.
The opinions expressed in the podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any investment, legal, financial, or tax strategy. It is only intended to provide education about the financial industry. Please consult a qualified professional about your individual needs.